This is how you put only 3% down on your first home. Now pay attention, because you only get one shot, one opportunity to make everything you wanted ever happen. It's called an FHA loan. The FHA loan, aka the Federal Housing Administration loan, is actually a loan that the government designed to help you be able to purchase your first home. What it is it's a loan that's backed by the Federal Housing Administration, which is under the housing department of the federal government. And what that means is it allows your lender to be able to give you a loan for less down payment, and in most cases even roll in your closing costs into your loan. Now that's not available for you after your first property, so that's why you got to take advantage of it on your first one. Now a lot of people ask me, well, what's the minimum that I can put down with an FHA loan? And the answer is simple. If you meet all of the criteria, you can put as little as 3% down. If you don't, it can be as little as 5%. Now, on a conventional loan, it's 20% down minimum in most cases. So you're looking at a great opportunity here. Here are some of the advantages of FHA loans. Number one, the credit score requirements are typically lower than your average conventional loan. Usually it takes about 680 minimum to be able to get into an FHA loan. But under some circumstances, it can even be lower than that. Your lender can accept a lower down payment because this loan is being funded and backed by the housing department. What that means is if you were to default on your loan, the FHA, the Federal Housing Administration, is actually backing this loan and guaranteeing it to your lender. Also, you could still qualify for this loan even if you've had a bankruptcy or other financial issues in your history. As I said, the government wants to help you own a home, and this is why they've rolled out this program. And finally, the closing costs for your home can actually be rolled into your home loan, which is something that is typically not available to you in other home loan types. But here, you can actually show up to closing with less cash in hand and roll it into your 30-year loan and pay it off over time. Now here are the FHA loan requirements for you to qualify. First of all, the home must be appraised by an FHA approved appraiser. Now what could stop this appraisal from happening is if you're purchasing the home for more than it's worth, or if the home has some issues like mechanical liens on it, or the title is not clean. FHA approved appraisers are very strict, so you need to find a clean home with good title that's worth what you're paying for it. You can only get an FHA loan if it's your primary residence, meaning you can't use it to purchase an investment property or a second home. However, there's a way around this in something that I like to call house hacking. So that's either buying a duplex, a triplex, or a fourplex, or purchasing a home with an ADU in the back that you can live in while you rent out the front home. As long as you're actually living on the residence, you can rent out the other parts of the home. You must occupy the property within 60 days of purchasing it. Remember, this is supposed to be your primary residence, so you need to show the bank that you actually plan on moving in right away. And finally, an inspection has to occur during the escrow process, and the inspection report must show that the property meets the minimum standards for an FHA loan. So you might be asking yourself, am I going to have to pay a higher interest rate to secure this type of loan? Actually, no. Because this is a government-backed loan, you're actually seen as a safer borrower because the government's backing it. Interest rates are usually higher when a lender feels like you may not be able to pay that loan back, so they need to secure their money by getting more interest every single month. That's not the case here. Now, your eligibility for an FHA loan doesn't actually hinge on your income or the amount of money that you're bringing in, but more so that you have steady employment history. This is verifiable through pay stubs, W-2s, tax returns, or bank statements. If you can show that you have steady income coming in, it's going to be a lot easier for you to qualify for your FHA loan. The FHA does state, however, that your monthly mortgage payment should be no more than 31% of your gross income. According to the Department of Urban Housing and Development, the loan limits for high-cost metropolitan areas, like LA County for example, is up to $970,000 in 2022. Now that maximum amount can actually dip dramatically in low-cost areas, as low as $420,000. So it's always best to check on the Department of Urban Housing and Development's website what the loan limits for your specific county are. If you have any other questions about FHA loans or you want to get one started today, just shoot me a text. I'll put my phone number in the description below, and I'm happy to answer any questions you may have, no matter what state you live in. And as always, please subscribe.